CNBC-TV18.
Hello and welcome to Startup Street. I'm Arundhati Ramanan and these are the top headlines from the startup world. The first IPO from the Tata stable in close to 2 decades is coming soon. Tata Technologies files its IPO papers with SEBI. The IPO would see parent Tata Motors and others offload over 23% stake. Daily fantasy sports brand Fantasy Akhada bags $11 million in a fresh round of funding by Florentine advisors and existing investors. They plan to launch a new brand that focuses on streaming, content, and analytics. Flipkart co-founder Binny Bansal is in talks to invest about $100 to $150 million in PhonePe as part of an ongoing financing round, as per a report. The transaction, if it goes through, will be among the largest individual investments in a new age firm. Facebook's parent company Meta is hashing out a plan to build a standalone text-based app that can rival Twitter. Move comes at a time when Twitter is struggling to maintain its user base due to the chaos under new owner Elon Musk. Prosus is actively engaging with multiple players to explore the sale of OLX's autos unit in several markets, including India and Indonesia, as per a report by TechCrunch. The company has held talks with startup Cars24 investors in India, but these have passed on the deal, the report adds. Silicon Valley Bank announces that it is issuing a $2.25 billion of shares to bolster its capital position after a significant loss on its investment portfolio. The company's shares suffered their worst drop in over 35 years as its stock plunged 60% and its bonds posted record declines, igniting a broad sell-off in US bank shares that also spread to Asia and Europe. Singapore-based e-commerce and gaming firm SEA is cutting fewer than 500 jobs at its Indonesian unit Shopee. Bloomberg News reported to control ballooning losses. The latest layoffs affect full-time and contract workers in Shopee's customer service team. Those were the headlines that we're tracking for you this evening. But on What's Brewing today, US-based language learning platform Duolingo launches its kids' literacy app called Duolingo ABC in India. My colleague Aishwarya Anand caught up with Bob Meese, Chief Business Officer of Duolingo, to talk about the offering and the India market potential for it. Take a look.
Duolingo ABC just recently came to India. It's an early childhood reading product for ages 3 to 8. And there, the gap we're trying to solve is we're really leaders in mobile education. And so they're creating products that are both effective and then also very engaging as well too. So it can be challenging to hold children's attention. And so that's really what we're trying to do, is to build a product that they'll enjoy using and they'll also help learn too.
Now coming to your other offering, that is your Duolingo English test. So can you tell me what is the kind of traction that you've seen on the app in India? Yeah. And how has the study abroad segment picked up in the country?
We're creating the category of online English proficiency tests. And so that's the innovation that we're bringing. We spent time from 2016 largely focused on getting more accepting programs all across the world that are accepting our test. And at this time, there's more than 4,200 accepting programs. In the lead up until COVID happened, we were seeing some growth on the applicant side, on the test taker side, but it was slower. And then all of a sudden in 2020, there was very great growth. So in that year in 2020, our tests grew 20 times relative to the previous year in 2019. And India was a really key part of that too. Okay. And so, yeah, when we look at the overall global international study abroad market, India is a huge part of that.
All right. Now, in the recent report that you'd released, that is on the India market, you mentioned that a student, if they have to go through a standard English test, they usually end up paying, for that test, they would end up paying like their month's household income, right? Yeah. So I want to understand that how have you placed your pricing points, and how is it different from the existing players right now?
Yeah. So our Duolingo English test has been priced at $49 for a test, which is far cheaper than any of the alternatives, which cost hundreds of dollars per test. And then also, we allow people to share their score with as many programs and institutions as they like for free, versus some others where they charge on based on the number of programs you share too.
I also wanted to understand from you that other than English, what are some of the top languages that's preferred in India?
After English, Hindi, our course is second most popular. English is, for wage potential. There's other people who just learn as a hobby. And so some of the other languages that we see being popular fit into that category. One that's really interesting is Korean. And then some of the other courses are on like French and Spanish.
Where are your top learners in India coming from? And what is the contribution of tier 2, tier 3 cities? And how do you further plan to penetrate the smaller towns in India?
Yep. Yeah, no, thank you very much for the question. As we released in the report to some of our more serious learners, those people that are spending the most minutes with the product come from Madhya Pradesh, Tamil Nadu, and Bihar. And so a wide diversity across the country. It really speaks to the core focus of Duolingo and providing more access. We do that both with our language learning product as well as with our Duolingo English test by being the lowest cost provider. A key focus for our Duolingo English test is we're not constrained by where there are test centers, which tend to be at the bigger metros. Somebody can take our test anywhere they have an internet connection.
Now, in 2022, your revenue has grown close to 47% and cash from operations has increased by $44 million from the last year, correct? So what is the India market share when it comes to your revenues?
If I had to pick one metric that I'm most proud of, it's our user metrics. So at this time, there's more than 60 million people who are using Duolingo in any given month. And so that's just that's really important. And so all of that to say, for India, it's become a top 5 market for us.
And on the hot seat today, Chennai-based neobanking platform KaleidoFin tells CNBC-TV18 that it is targeting a 2,000 crore rupee book on its own platform by next year. In a chat with Ritu Singh, Vipul Seksaria, the co-founder of KaleidoFin, also says that the fintech plans to build working capital loans in the next 6 months. Take a look.
We have been growing pretty rapidly. I think we were one of the first to think about enterprise loans to the informal sector. So our book with our partners have gone to now $1.2 billion, about 10,000 crores. We are doing about 1,000 odd crores of underwriting every month. We've recently also started to build our own platform focused on nano and micro enterprises, where we have crossed now about 420 crores. Next year, we're targeting about 2,000 crores of book in the coming financial year. So lots of exciting times in that sense. Many more customers, 2.1 million on the off-balance sheet side. Baby steps here, but hoping to have at least 200,000 customers next year on our own platform as well.
Are there specific areas where you're seeing higher credit demand? And for instance, when you're originating loans from your own book, where is really the focus area? Is it on these nano entrepreneurs very much?
It is very much on the nano entrepreneurs, and we are sort of, I think, a little bit gender focused in that regard. We are also trying to, our own models, credit models have shown that we've done well with women as the entrepreneur or women playing a role in the business, and that has been really powerful for us. So we are trying to also exercise that in our operations. We are trying to find channels through which we can discover small women entrepreneurs and fund them. And to our benefit, we've seen that repayment rates are better when women are involved in the business. It's a better credit history. And overall, we've also seen the agency of women getting added into the local business as well. So we're focusing on that. We are trying to build a working capital loan in the next 6 months, and on-tap credit, which will be like a rotating credit in a partnership with the bank.
The fintech area has been a bit of a grey area as far as regulation is concerned until recently, where we've seen the Reserve Bank of India come out with digital lending guidelines and various other rules around credit lines, PPIs, etc. How has life changed in the last few months? Has compliance been an issue? Has the cost of compliance gone up?
I can say that they're keeping us busy, but I guess to good end. For us, it was helpful because we were already sort of thinking about it a little bit ahead, primarily from good practice standpoint, because good practices don't change. Yeah. So we ensured that lending was all happening into a customer savings bank account right from day one. We ensured that the payments were coming into the lender's account directly with no wire media. So we had already done some of this. We worked more on the app to make sure that the app is having the right disclosures. It is read out in a very simple sort of a term sheet, 5 to 6 points. So those things we've built on. But luckily for us, we were already sort of preempting sort of good practices to start to make an impact and work on that.
But there are some lenders, for instance, that have gone to RBI seeking certain clarifications, whether it is the first loss default guarantee or other areas. What about KaleidoFin? Have you had any issues with that?
So our belief is that for regulated entities, RBI will look at FLDG structures, because regulated entities are in the business of taking risk. Yeah. Here they will share a risk with another lender in some capacity. So our belief is that that will continue. And for whichever entity who wants to sort of really do this on a scaled up scenario, they will have to come under regulation because RBI doesn't want businesses to operate in the shadows. And in that regard, we already took an NBFC license 7-8 months ago, and that has again helped us. We are also recommending the same to our partners, that while FLDG is like a bad word today, but for regulated entities, RBI must sort of look at that there will be skin in the game for regulated entities. Yeah.
On that note, it is time for us to head into a short break. But coming up next in our special segment, Future Female Forward, we put the spotlight on Ras Oils, an all-women-led beauty and wellness brand. Stay tuned for that. Welcome back. You're still with us on Startup Street. We kicked off our special series called the Unicorn Health Check. This with an aim to create a report card of our most valued startups, delving deep into what's working and what's not. Today, we're going to look at India's startups in the quick commerce space. Aishwarya Anand is standing by with those details. Aishwarya, over to you.
India's quick commerce market is set to grow 10 to 15 times by 2025, reaching a market size of close to $5.5 billion. The quick runners are going after a big chunk of India's consumer market. Food and daily necessities account for roughly 1/3 of India's $1 trillion annual retail spend. India is already leading other global markets in terms of quick commerce adoption, with a 13% penetration, nearly twice as much as it is in China. All thanks to the pandemic, delivery within minutes and a greater assortment of products than one could find at a nearby Kirana store. What's to be noted is that the market is currently being driven by metro and tier 1 cities, but the total addressable market of $45 billion indicates a lot of room for expansion. Over $3 billion have been invested in quick commerce startups until 2022. Notably, the top quick runners, Blinkit, Instamart, Big Basket and Dunzo, have either been acquired or backed by deep-pocketed players. But the unit economics were suspect even before the race began in 2021. Customer acquisition costs, rapid expansion and intense competition only made the cash burn worse. By mid-2022, category building had resulted in $15 to $20 million monthly burn rate with IPL ads and new dark stores. As the funding winter set in, cutting losses became the priority. Let's take a look at their financial health. In 2022, Blinkit, formerly known as Grofers, was acquired by Zomato. The struggling startup was valued at $568 million in the deal and lost its unicorn status. In the third quarter of FY23, it reported a loss of Rs 289 crore, but managed to narrow its adjusted EBITDA loss to Rs 227 crore from Rs 259 crore on a sequential basis. Zomato has even blamed Blinkit for the delay in posting profits and has said that excluding Blinkit, it was adjusted EBITDA positive in January. Now let's talk about Zomato's key competitor. Swiggy joined the quick commerce bandwagon in 2020 with Instamart. In 2022, it earmarked a $700 million investment to grow its quick commerce vertical. Helped by Instamart, Swiggy logged a twofold increase in revenue in FY 2022. But the company's losses also widened to Rs 3,629 crore as expenses shot up mostly on the costs of running Instamart. Moving on, Tata Digital, in its largest acquisition, had acquired Big Basket at a valuation of $1.8 billion in May 2021. In FY 2022, Big Basket's losses surged 4 times to over Rs 800 crore. However, funding winter was not a worry for Big Basket as Tata Digital pumped fresh funds in 2022, taking its total investments in the subsidiary to more than $500 million in just 2 years, mostly to help it grow BB Now. Let's now put the spotlight on Zepto, the startup which started the 10-minute dash. At a valuation of $900 million, the company is within touching distance of becoming a unicorn. But its cash burn is deep, Rs 3.7 spent to earn a rupee of revenue. When Zepto last raised funds in mid-2022, it planned to reach 24 cities but is now contending itself to the metros to conserve cash. And not just Zepto, Dunzo too is wary of stepping outside the 8 top cities. In FY 2022, the company burned close to Rs 10 to earn a rupee of revenue. In FY 23, it has shuttered some dark stores and also cut some jobs in search of positive unit economics. While that's the case for most of the quick runners in the country, they are lowering advertising spends, setting up fewer dark stores and reducing delivery payouts. But the silver lining is quick commerce players are seeing their older markets turn profitable.
Time for our special series, Future Female Forward, where we bring you the story of Ras Oils, an all-women-led beauty and wellness brand that's offering organic products from farm to finish. Take a look.
Thanks to the changing consumer preference post the pandemic, clean beauty would soon dominate the $380 billion plus beauty and skincare market in India. A report by Statista suggests that the segment is growing 10% each year. This coupled with the growth of D2C, there are now over 300 clean beauty homegrown brands all wanting to take a bite of the $22 billion opportunity. And one such startup that is capturing this growing appetite is Russ Oils, a farm-to-face skincare and personal care company.
We are vertically integrated. Everything right from cultivation to production of the ingredients to the final goods, they happen in formulation at our DSR-approved R&D lab and our FDA-approved facilities. Our quality control process is extremely strong, and we make sure that every batch is tested before it kind of hits the commercial production. We have stability studies before kind of finalizing any product. Every batch sample is kept, and microbial testing is done very extensively.
Russ Oil started with 15 SKUs and today has over 100 products in its basket. The brand is now active in the face, lip and body care markets with a selected product range including elixirs, serums, lip balms and essential oils. Currently, Russ's top products include 24K Gold Radiance Face Elixir and Gel Serum.
So currently our customer database is around 1.5 lakh customers, and our retention cohorts are around 45%. The age bracket of our consumers is anywhere between 25 to 45, which is a core audience, and women primarily are our core audience as well. Price positioning is in the luxury segment, so our product prices start anywhere between 800 upwards to 4,000 rupees. Our average order value is about 2,000 rupees. Russ's key demographic is in the Tier 1 cities, which are Mumbai, Delhi NCR, Hyderabad, Bangalore, and a couple of other Tier 1 cities, which make up over 50-55% of our revenue.
Russ Oils is now planning to penetrate the price-sensitive Bharat market by including small sizes of its best-selling products.
In the Tier 2 cities, we've expanded our warehouses to at least 5 to 10 different cities across India so that we can service our customers in the e-commerce places in a more efficient manner, and we get more orders from the Tier 2 cities as well.
The brand claims it has clocked 20x growth in the last 2 years and grew 300% in FY21 to 22. Russ, which currently sells via its website and e-commerce platforms like Nykaa and Amazon, is also planning to venture into the offline space.
Our revenue mix has been like totally skewed towards the online sector, with 90% revenue coming from online marketplaces and our own D2C store. With B2B becoming strong and with offline and our own store expansion plan taking shape in the coming 1 to 2 years, we expect the split to become from 90-10 to something around 60-40 or even a 50-50.
Recently, Russ Oils raised $2 million in pre-Series A funding round from 6 Sense Ventures. However, the journey to raising funds wasn't easy for the all-women-led startup.
When we started the company, it was difficult for people to actually take us seriously. They would be like, who would buy a product which is 2,000 rupees?
Online, that too.
Online, exactly. Raising funds from a Tier 2 city and being a woman is actually a big deal. We had at least 20 to 30 different rejections before we finally found the investor who believed in the idea of luxury.
The future of beauty market resides in an omni-channel experience. Well, that is the word on the street. Russ Oils too is planning to expand its offline presence. Its first store is set to open in the startup's hometown, Raipur, soon, with more to follow. Going forward, the company is also shifting its focus to Tier 2 and Tier 3 cities, where it's seeing a healthy growth in demand. With camera person Imran Qureshi and Saurabh Chauhan, Aishwarya Anand for CNBC-TV18.
It is Friday and it's time to see how the startup space fared in terms of new deals this week. 11 deals took place valued at $158 million as per data from Venture Intelligence. Here are some of the notable deals. Supply chain financing company Mintify bagged $110 million from Premji Invest, Norwest, Elevation Capital and IFC. Gaming company Fantasy Arcada raised $11 million from Florentine and others. Environment-friendly home product seller EcoSoul got $10 million from Axel Indie. That's not all. B2B payments automation platform Growfin got $7.5 million in Series A fundraise from SWC Global Fund, 314 Capital and others. And education-focused fintech GreyQuest raised $7 million from Provega Ventures and others. Overall, the startup world has seen over 133 deals in 2023 so far, valued at over $1,400 million. And with that, it is a wrap on this edition of Startup Street. More news and updates coming up on the other side. Stay tuned.